Hello and welcome to the Roundup, covering what's important to accountants and advisors across the month of May. This month, we're looking at how the ATO is making it easier to recoup losses. We'll show you how. We'll also look at the highlights from Tax Time 2022 guidance, but first up, the federal election. Michael, we've had an election, we've had a result, a new government has formed. What does that mean for the budget announcements and also for tax developments going forward?
Yeah, it's a good question. We are getting asked about that a little bit, just in terms of what does the federal election result really mean. What it means is there's probably a bit of a period of uncertainty, unfortunately, because there were some measures that were announced in the budget earlier this year that were not enacted. So we had some announcements, but they really never made it much further than that. There were some things that were announced in the budget that passed through the system very quickly, but there were a number that were kind of left on the table. The extra deduction boost for investment in skills and training, the extra deduction boost for investment in certain types of technology, expansion of the patent box regime. There are a few of the things that were announced in the budget but weren't enacted prior to the election. It's not entirely clear at this stage what the new government will decide to do with those measures. And until we hear more, just be a little bit careful about what you say to clients around those measures, particularly as we get towards the end of the year. For example, some clients might have been planning to bring forward some expenditure or increased expenditure on training and development for staff, maybe on technology, in the hope of getting these bonus extra deductions. And I think the warning for them is, look, if you're going to spend that money anyway, that's fine. But if you're going to spend that money or spend more than you were planning to or earlier than you were planning to, because of those extra deductions you thought were coming, just be aware that they may not be. So just to think about that kind of in a realistic way, these things may never see the light of day. We just don't know. Even if the new government decides to go ahead with the measures, we really don't know exactly what they're going to look like. There wasn't a whole lot of detail announced in the budget, and it's quite possible that a new government would go in a slightly different direction anyway. So we really do need to be just a little bit careful about those particular measures. In terms of what we might see out of our new government, look, this wasn't an election that was fought over major tax reform ideas. Really, things were pretty light on from both major parties when it comes to tax. A couple of things that the Labor Party had kind of indicated it would be working towards in terms of tax developments, cracking down on certain areas around taxation of multinationals. But look, it's really tinkering to some extent around the edges of some developments we've already seen in prior years. For those of us who are dealing mainly with small and medium businesses, those changes aren't probably going to impact on our clients, probably in a significant way anyway. The other thing is that the government has, or the new government has announced that certainly one of the ideas that they had was to encourage the take-up of electric vehicles. And so one of the proposals that's been put forward as part of the, election platform is an exemption from tariffs and also FBT on electric vehicles that fall under a luxury car tax threshold. Now, there aren't many electric vehicles that fit within that category just at the moment, so it remains to be seen how useful a policy like that would actually be in reality. But having said that, we may well see some developments. Again, we don't know much of the detail. It's kind of pretty light on detail at the moment. There's no law. We'll just have to wait and see what plays out. Now, in terms of when we might find out a little bit more, look, we are hoping that we'll hear something soon, particularly around those announced measures from the budget. We've been told to expect an updated budget for the current year in October. That's a fair way away, so we would certainly hope to be getting some indication around tax policy prior to that, but it may well be that we don't find out much before that. So just beware. There's a couple of things that have been announced that haven't become law. Just be careful about what you advise clients in that space. Beyond that, we'll keep you updated as and when we find out more in terms of tax policy movements from the new government.
Let's look at losses. It's been a difficult period for a lot of businesses. Michael, the ATO has come out with something new to help businesses recoup those losses. What can you tell me about it? Yeah, well, there have been some pretty major events over the last few years that, as many of us were well aware, has had a significant impact on many businesses, from floods to bushfires to, of course, COVID-19 pandemic. There's a whole range of pretty significant factors that could well have impacted on quite a few of our clients' businesses and their profitability or not so much.
when we're dealing with clients who are operating as sole traders or as individual partners in a partnership, I think a lot of us would be aware that when those types of clients make losses from their business activities, there are certain tests that need to be satisfied in order to be able to offset those business losses against income from other sources. So that might be salary and wages, rental income, whatever the case might be. The non-commercial business loss rules are what we're referring to here. Now, in order to satisfy those tests and those rules, there's a few different ways we can go about that. For example, if we've got clients who carry on a primary production or professional arts business, there are some kind of shortcut ways to potentially utilise those losses, but it depends on the client's other income, so from other sources, being less than a $40,000 threshold. So limited scope to get in there, but for some clients that's enough for them to be able to utilise the losses against other income. In other cases, clients will need to pass a $250,000 adjusted income test, but also will need to show that their business can pass one of 4 commerciality tests. Now, failing that, there is always the option of applying to the Commissioner for a determination, basically showing that, for example, your business has been impacted by a significant event beyond your control, or perhaps that you're operating in an industry where there's a significant lead time between starting a business and then turning a profit. Well, what the ATO has done recently in the last month is release a draft practical compliance guideline, PCG 2022/D2, so draft at the moment, which basically deals with that last option about the Commissioner's discretion or determination. And effectively what that PCG does is it provides a safe harbour option. And effectively what the ATO is saying is if you can meet certain conditions, you can offset your business losses against other income without having to ask the Commissioner specifically for that determination. You don't have to apply for it. You just need to keep records proving that you meet the conditions that are set out in the PCG. So the hope is that for some people administratively, it will be easier to utilise their business losses against other income.
So what do you need to do to qualify for the safe harbour, and what years does the safe harbour apply to?
Yeah, well, first of all, let's have a think about timeframes. The ATO says that if and when this PCG is finalised, it will apply to the 2020, the 2021 and the 2022 income years. So we've got 3 income years initially at least that would be covered by this safe harbour approach. Now, in order to qualify for the safe harbour, there are some basic conditions that need to be satisfied. First one is that we've got a business that has generated a loss. Well, if we didn't have a loss, we wouldn't be worrying about these rules in the first place. We need to ensure that our client passes the $250,000 adjusted income test. So there is still a requirement to pass that test in order to qualify for this safe harbour. The next bit is that we need to show that the client's business has been affected by either bushfire, flood, or by the impact of COVID-19 in terms of restrictions on movement and lockdowns, that sort of thing. The other main element of applying the safe harbour approach is being able to demonstrate that the business was not able to be carried on in the normal way. Maybe it couldn't be carried on at all, or maybe the scale of the business was basically forced to be reduced across that period. Or that we can demonstrate that customers were simply not able to access the business in the same way that they would have aside from these specific types of events occurring. So they're the basic conditions that need to be satisfied, and if you are able to satisfy those basic conditions, there's an expectation that you will keep evidence to prove those conditions are met. But if you can, you don't have to submit a formal application to the Commissioner for a determination around the non-commercial loss rules. The final thing just to note on this is that, as with kind of lots of the things that the ATO does in this area, if you work your way through those safe harbour conditions and realise that you don't meet one of those conditions for whatever reason, that doesn't necessarily mean you won't be able to utilise your losses, and it doesn't mean that you can't apply to the ATO for a determination. It just means you can't rely on the safe harbour. So you could still potentially write to the ATO explaining your situation and hope that the ATO comes back with a favourable determination, but obviously that will depend on the facts. So not qualifying for the safe harbour, not necessarily the end of the story when it comes to those losses, but you would need to kind of go through a few extra steps in order to be able to utilise those losses. So a safe harbour approach that will apply at least for the time being across 3 income years, and will hopefully make things a little bit easier for those businesses who maybe typically can pass, say, the assessable income test, but because of reasons outside their control, fire, flood, COVID, weren't able to maybe for 1 or 2 years. And hopefully this will just help ease the compliance burden around utilising and accessing those losses.
The ATO has released their new tax guidance for 2022. Matthew, is there anything specific practitioners should be aware of as we approach the new tax season?
The ATO have released their priorities for tax time 2022, predominantly targeting individuals. Now, many of the ATO focus areas and priorities are the sort of usual standard type things that you and I have seen and expect to see year on year. So, for example, the ATO is going to be focusing on record keeping and substantiation, which in my view is just one of those areas that taxpayers seem to consistently get caught out on. Interestingly though, what's a bit more specific to our time is that the ATO are going to focus a bit more on hybrid work from home arrangements. And the ATO are basically saying, if you've got clients that are work from home and claiming work from home expenses under the actual fixed rate or shortcut method, the ATO are basically expecting a corresponding decrease in certain categories of other deductible expenditure. So, for example, car and transport expenses. Now, my comment there is that certainly you're going to find that some individuals who are work from home, especially in those hybrid arrangements, are still going to need to and will be undertaking deductible travel. Having said that, I would just be a bit more careful this year. I certainly wouldn't assume that last year's logbook is representative of this year's travel, and it would be prudent to just get that checked, just to see if the pattern of travel has changed, and just make sure that that's appropriately substantiated. Now, the other thing that the ATO are focusing a bit more on, which is also a bit more contemporary to our time, is cryptocurrency and non-fungible tokens, so NFTs. The first warning there is that the ATO are actively data matching in this area. So if you've got some sort of year-end checklist that you go through with clients at year-end, it probably would be a good idea to make sure that cryptocurrency and NFTs are on the list of things to check. The other thing to be aware of is that you do need to work through whether your client holds the cryptocurrency or NFTs on revenue or capital account. Okay, so if your client holds the cryptocurrency or NFTs as a capital investment and they make a capital loss on any disposal, the ATO warning is that those capital losses can't be offset against their other revenue income. So, for example, salaries. On the other hand, if your client is carrying on a business of trading, buying and selling cryptocurrency and NFTs, okay, it can be possible to offset those losses against their other gains or their other income. But you do need to check that they've passed the non-commercial loss tests.
Are there any other updates from the ATO in terms of things that might impact on clients as we move into the next tax season?
Yeah, so the other thing to keep in mind in this upcoming tax season is that the ATO has said that they'll recommence from June onwards on offsetting client refunds or client credits against debts that have been previously put on hold. Now, debts that have been put on hold are really just those debts that the ATO have said are uneconomical to pursue. The bit of a trap here is that those debts won't necessarily show up as a current outstanding amount on the client's statement of account, but at the very least there should be some indicator on the client's online services portal that there is non-pursued debt somewhere. So if you've got clients that are expecting a refund and they've got that non-pursued debt indicator on their online services account, just be mindful that they're not necessarily going to get their full tax refund back, if at all. And it would probably be a good idea to make sure that that's appropriately communicated to the client so that there's no surprises.
And that's the roundup for this month. The Knowledge Shop membership provides technical support, a knowledge base of standards and work papers, your client newsletters, updates, and so much more. It's an absolute time saver for practices across Australia, and we help thousands of accountants every single day. If you'd like to see how we might help your firm, then give the team a call on 1800 800 232, and they'd love to show you what we do. Look forward to seeing you next month.